What's up, guys? So I wanted to make a quick update. As you guys remember, my last video, I said this was going to be a buying opportunity. So here we are, guys. The S&P 500 is bouncing back to the upside. Fear and greed index is still at 38. So we still have a long way to go, guys. Short to medium term to the upside to enter the neutral phase. So as we speak, the market is bouncing. We're up about 1% on the S&P 500. And I was telling you guys basically to buy the dip here. And right now my target is always the means, which is 1% higher in this ballpark to about 605 on the S&P 500. In my humble opinion, if this market continues squeezing to the upside, we'll most likely, go to that mean reversion, then maybe get rejected, bounce again, and most likely we'll hit that first standard deviation here where I put some red circle for you guys to kind of show you guys what I'm expecting. And as you guys can see, we have hit that first standard deviation and it has been resistance for the past months. So I'm basically expecting the same type of price action. Nothing changed from my thesis. Choppy to the upside for the entire year of 2025. It's going to be a tricky year, a lot of window of weakness as well. If you guys recall, this is the seasonal data for the S&P 500 of all the post-election years from 1949 to 2023. And as you guys can see, historically speaking, it's a bullish year, but in the same time, it's a very volatile year with multiple windows of weakness, which I already talked about in my last prior videos. So nothing really changed on my bigger picture thesis. So in layman's term, I'm still expecting 2025 to be bullish, but I'm also not expecting it to be a crazy year like the past 2 years. The past 2 years, we were up more than 20% back to back. And historically speaking, if you look at data of the broad market, when we do have a third year that is positive after 2 years being up more than 20%, the returns tend to be very low. They tend to be in single digit returns only between 5 to 6% in that ballpark. So that's basically what I'm expecting for 2025. That's my base case. And then afterwards, a nasty bear market in 2026. Looking at the smart money, the money ratio, also wanted to show you guys an updated version. So as you guys recall, I told you guys that the money, the red line was capitulating like there was no tomorrow and we're going to be entering a big macro bear market. So obviously you don't really want to be selling in the same time that the money is selling. Right now, the money is FOMOing back into the market. As you guys can see, there's a big spike, very aggressive spike. And the blue line, which is smart money, has slowed down the purchase. So they were doing the opposite. They were very aggressive buying the dip while I was telling you guys to buy. Basically, it was a buying opportunity. We'll see if this continues in the next coming weeks. But for now, they have slowed their purchase. Obviously, the blue line is slowly going back down. Another very important chart to look at is the AIM advisor and investor model. So you can see that the advisors managing billions of dollars of portfolio basically capitulated as well during this very small correction. It was what, like not even 5%. They basically all capitulated. This basically means that there's a lot of money on the sideline now that will be forced to chase back in the market if the momentum continues to the upside. You're going to have all these money managers that are now on the sideline with a lot of cash, and they are going to be forced to buy back in the market, which equals more buying power to the upside for us on the short to medium term. As you guys can see, historically speaking, when we're in these levels, it's always a good time to buy the dip or to at least not panic and, sell everything. Obviously, not financial advice. All right. So now, real quick, before I change subject and I start talking about, short to medium term, the trades I'm doing, what I'm looking at, and obviously the second half of the video is always about Bitcoin. Stick around as well because at the end of the video, I'm actually going to show some really interesting data on how much Bitcoin you actually need as a percent allocation of your portfolio to outperform the S&P 500, which actually is a very low percentage compared to what you're probably thinking. So stick around at the end. I'll be showing that data as well after the crypto part of my video. But before I enter that section of the video, I wanted to talk about two major important things that I want to discuss with you guys for educational purpose. So you can kind of learn how the market moves and the little short to medium term shenanigans that happens in the market. So I was waiting for the put to call ratio to spike because every time it spikes, basically that means that there's a lot of people hedging themselves and buying puts to protect themselves because they're basically all capitulating, most likely at the bottom when everyone is fearful and thinks the market is going to crash. And it's basically always the same pattern. And then when we have the spike, that tends to be when the market finds a short to medium term bottom. But it also coincides with the third Friday of every month, which is today, which is Jan 17, which is OPEX day. And what I'm basically trying to explain to you guys in layman terms, the third Friday is a big option expiry day, and market makers tend to like to do the complete opposite of how the market is positioned. So right now, everyone was talking about entering a bear market on the short term, right? Everyone was now into today position for a market crash. So obviously, market makers are going to reverse the market and collect all that premium in their pockets. So those are kind of the short-term shenanigans that happen in the market. If you were wondering why we're having such a strong bounce today, this is one of the reasons. So I'm happy to see the put to call ratio finally spike. I was waiting for it to spike and it wasn't for a little while. People were very complacent until obviously everyone starts panicking in the same time. And also the other really important chart to look at is the equity edging index, which is basically another way of looking at the put to call ratio. And as you guys can see, when we're in this green zone right here, this basically means that everyone is hedged. Everyone is expecting the market to go lower, which tends to be the macro bottoms for the S&P 500. So this is definitely going to be a chart to keep an eye on for 2026. If I am correct for the bear market of next year, this is definitely going to be a chart to look at to find the bottom for 2026. And as you guys can see right here, we had a beautiful spike. So this is what you want to see when you're forming a bottom. You want to see everyone hedging the portfolio. So that basically means that if the market momentum continues to the upside, there's a lot of energy to push the broad markets to the upside. This is more on the technical side. It has nothing to do with fundamentals, just to be clear. So now before I switch to crypto, I wanted to discuss what I'm basically seeing for the second half of 2025. Obviously, I'm still expecting a lot of choppiness, a lot of windows of weakness. They're all going to be buying opportunity on the short to medium term. Long term, they're not going to be, in my humble opinion. Because even if we close the year after a lot of sideways chops to slowly grind to the upside and we're up 5 to 6% at the end of this year, you know, those very small gains are all going to get wiped out in a matter of weeks once the actual bear market starts, which it's inevitable to happen. So this is probably the second most important part of this video because right now, right, all our calls were correct, but now while everything is up, it's not the time anymore to think about those things. Now it's time to have a game plan to exit and to know where we're heading to take advantage of all the market volatility. And my point is, if the market just goes up 5 to 6%, which is my base case, and then we enter a nasty bear market, and we lose all those gains in a matter of weeks anyways, what's the point of being all in the market right now? Does that make sense? Obviously, I'm still expecting specific horses like Tesla, Bitcoin, and other specific names to run like crazy and to basically have some really good narrative and news pushing those stocks higher this year, but it's going to be a tricky year. Most things are going to be very choppy, sideways action, and then a few names are going to probably again push the market a little bit higher to then enter a bear market, right? So what's the point of being all in the S&P 500 if you know that most likely we're very close to the top, and even if this year is slightly bullish, you're not going to make life-changing money, right? So because of this, this is not financial advice, but this is just my thought process, right? Obviously, there's a difference between how you view your short-term portfolio and your long-term portfolio. What I'm about to say has to do with long-term portfolio. What's the point of being all in the market right now in your long-term portfolio, right? Isn't it a better idea if you kind of know that eventually we're going to enter a bear market in most likely maximum 1 year? We have 1 year left max of the market still being bullish. What's the point of being all in the market if you're just going to make 5 to 6%? Why not start taking profits right now? You made a lot of money in the past 2 years. Take some chip off the table, 10 to 20% already right now. Keep it in cash, keep it in short-term T-bills, money market funds, GICs with the bank, or my favorite strategy, which is selling cash secured puts in option land and just collect premium. When the bear market comes, which it will come, you're going to have already 10 to 20% in cash. And then, in my humble opinion, after the second half of 2025, this is exactly what I will be doing. It's increasing that cash pile to between 30 to 50%. But right now, my point is, what's the point of being all in the market? In the long-term portfolios, for me, I'm weighting the risk reward, right? As a swing trader, because when you're long-term investing, you're basically swing trading on a bigger time frame horizon of a couple of years. Right now, we just had 2 beautiful years, right? We're most likely going to have one last year of very mild returns in the single digit and then enter a bear market. Why not just take some chip off the table, prepare yourself in advance, and take advantage of the spike we're having right now and this bounce, especially if we go back in these higher levels to scale out 10 to 20% and keep it as liquidity in your accounts. I think, in my humble opinion, that might be the best risk reward. Obviously, short to medium term, that doesn't impact me or my short term accounts, right? Or my short term calls here. So, just a quick thought process I wanted to give you guys. Sorry if I'm like rambling and just repeating myself. Hopefully, it makes sense. So, hopefully, this helps. Obviously, not financial advice, but in my humble opinion, it might be smarter in long term portfolios to be more conservative for 2025. And obviously, you want to have your money in the horses that are going to perform very well, like, as I mentioned, Tesla, Bitcoin, and a few other names. All right, guys. So before I start talking about crypto and I show you guys the sentiment in crypto, I just wanted to show you guys, Tesla obviously is having a bounce back. That's what I was saying in my last video. I'm still expecting it to continue, by the way, to about 477 using the Lilo model from Answer Invest. But anyways, going back to Tesla, I just wanted to show you guys based on probabilities. Right now, we're at the means. I told you guys that it was a good time to sell some cash secured puts in this lower region of the standard deviation ranges in my last video, if I'm not mistaken. You would have made a lot of money. That's what I did personally. I collected a lot of premium. And right now, based on probabilities, Tesla should go back to these levels. So it should range in this first standard deviation of the price action and then most likely have a big reversal. Right now, as I mentioned in my last two videos, Tesla is going to go nowhere. It's going to go sideways. It's going to be very choppy. It's going to be a big range to the upside and the downside until we actually have this big breakout and we do go to these crazy levels, which is what I'm expecting for 2025. And, my crazy target to the upside, I could be wrong on this one, is about $800 per share for 2025, which is pretty crazy, by the way. That's a 2x on your money. I could be wrong on that. But anyways, for me, it also depends on, is it my short-term portfolios or my long-term portfolios, right? Long-term portfolios, I'm not selling Tesla. Okay, I'm holding Tesla for 4 to 5 years. I told you guys my thesis. I already talked about what's going on with Tesla. It's magic. Just hold, leave it in your portfolio. This is basically buying Apple 10 years ago. All right, guys. So now let's get in crypto. So the fear and greed for crypto plummeted, which basically when we're in a bull market, it's very typical for the fear and greed to drop to the 50 level. And every time, if you go back to prior bull markets for Bitcoin, it's always a buying opportunity. So this is why I told you guys that, it was a good time to buy Bitcoin and to basically use the dollar cost averaging ratios I shared with you. And talking about those dollar cost averaging ratios, both of my DCA ratios triggered a buy signal actually, which is very rare. And when it happens, it tends to be a very bullish signal. So my first one that I like to use, I already talked about this, is Bitcoin divided by the VIX. And it basically just gives you this chart. And then I use very simple standard deviation range on the price section. And every time it hits the second or third standard deviation, it triggers a buy signal. That's it. It's very simple. And then I like to use the Tabby model from Answer Invest as well underneath right here, which is a really good indicator to know where we are in the price of Bitcoin. And one thing I will say though is to never forget where we are in the cycle of Bitcoin. So yes, technically the ratio was correct, but don't forget, we're now in the bull market, guys. So your risk to reward when you're dollar cost averaging into a bull market is always going to be lower than if you dollar cost, in the bear market. which is coming, by the way, next year. And that's when you make the most money. This is when I was making my video in 2023, telling people to buy, told my family members to buy Bitcoin. No one listens. No one cares when we're in the bear market. But when you use these types of ratio in a bear market, holy shit, you get the best entries. And then if you're just patient enough, you make a filthy amount of money. So I just wanted to remind you guys that yes, these ratios are correct. And hopefully you start using these ratios to dollar cost average into Bitcoin for your long-term portfolios. But never forget that the reward will never be as good as when you're doing the same strategy in a bear market. All right, and my second DCA ratio, which is Bitcoin divided by the money to supply of the US Federal Reserve, basically, also hit a buy signal right here. You can see I basically just use the 50-day breadth combined with where we are in the probability of distribution of the price action. And it triggered a buy signal in the same time than my first DCA ratio. So if you had listened to my past video, which I think I called DCA into Bitcoin or something like that, you would have caught this beautiful bottom right here at about $91,000 per Bitcoin. And now we're basically bouncing back at the means of the probability. And if Trump does say some very bullish things next Monday, which is Luther King holiday, by the way, the 20th January, the market is closed. And it's also the same day of the inauguration of Donald Trump. If he does say some crazy shit to the upside, guys, definitely we're going to go most likely to about $110,000 per Bitcoin USD, which would, be close to that first standard deviation range of the price action. All right, so now I just wanted to show you guys the liquidity map of Bitcoin as well, which is very interesting. Just to, again, look at the shenanigans on the short term of how the market makers move the market. So this is the liquidity map. And so this is a screenshot I took from the liquidity map, I think a week ago. You can see the date here above on my computer, and you can see that when we had this flush at 90K, and I told you guys in one of my video I had some levels to 91K to flush the longs. That's the reason why, because there was a lot of liquidity and we didn't tap that level yet, so we kind of went sideways until we had this big flush. And then I just wanted to show you guys that once we flushed this, there was no more liquidity to the downside to go hunt for the market makers. But now look at where the liquidity was on the long side. It was to the upside at about $103,000, $104,000 USD per Bitcoin. And where are we right now? Well, we're basically there. So this is how they move the market. It's based on liquidity and where they can chase stops of shorts and longs. Now looking at an updated version. So this was basically the liquidity hunt right here when we hit that 90K. And then, as I mentioned right here, guys, this is where the next big liquidity hunt was, which was to the upside, and that's exactly where we are right now. And then the next stop is at about $110,000. This will most likely depend on next Monday on the Trump inauguration, his speech, and what he says on the short term. Is he going to say some crazy shit, or is he going to say some bullish things? I have no idea. Also, don't forget that it might also be a buy the rumor, sell the news event, right? So even if he says something bullish, if the price is already gone up, it could still have, a small correction after the inauguration, depending on what he says. All right, guys, so now let's get in some juicy stuff. So this is an updated version of where Bitcoin is going to go based on probabilities and standard deviation ranges of price of prior cycles. You're probably not even here anymore. This video is extremely long. I apologize for that, but at least it's really good information. So hopefully you're learning and pay attention, because if I am correct on the presidential cycle and where we're heading, there's going to be so much money to be made next year. It's not even funny. So for now, instead of just being greedy and thinking about how much money we're going to make, the first thing to do when you're 1 year away from entering a bear market is obviously knowing your exit strategy, because if not, well, you will not even have money to, take advantage of your own calls, right? So looking at the Mueller bands on the weekly time frame of Bitcoin and using the Lilo model as well on the weekly time frame, we can see that in my humble opinion, minimum, we're going to go right here, guys. All right. So this is my first target for Bitcoin. It's my revised target. So hopefully you're still here. So you're getting some really good stuff right here. And so yeah, so my first target, guys, it's in this ballpark. It's about 170, 180. So once we hit that orange line right here, which at the moment is at 166,000, with time it's most likely gonna slowly go to the upside as well, if because it basically follows the price of Bitcoin. So if it starts going up, it's gonna go up a little bit as well with time. So just take that in consideration. So basically, when we get to that level, personally, I will be selling 30 to 50% of my position in Bitcoin, taking profit, obviously, in short-term accounts. Long-term accounts are different. And at the end of this video, I'm going to show you guys some data that's going to basically give you a really good insight of how much Bitcoin you actually want to own in your long-term portfolios to outperform the market. So stick around as well. So going back to this chart, the second thing that's going to be the most important is going to be this red box right here, which is the bear market floor for 2026, when we do have a market correction and most likely a crash again in the price of Bitcoin, which will happen again, guys. That's the nature of Bitcoin. And this is basically the 200 moving average of the weekly time frame of the logarithmic chart. It has been a very good, support floor during bear markets. When we're in this level, just buy, just accumulate, buy Bitcoin and leave it there, go on vacation. And right now, what's important to take note is that it's about at 43,000 USD per Bitcoin. So obviously, in the next coming months, it's going to continue slowly going up. And I suspect that it's going to be in the ballpark of $50,000 to $60,000 USD per Bitcoin. So that most likely will be the floor for the next bear market. So obviously you can use your peanut brain and calculate your own risk reward ratios of if you're buying Bitcoin at these levels, because obviously this is not the same return, right, to buying Bitcoin than when I was buying in 2023. And yes, I did add here and I did add here, but I'm no longer adding right now because we're now way past the first stages of Bitcoin and we are entering the stage 4, which is the FOMO stage, which I'm going to show you guys how I track that as well in the next few minutes. And right now, I'm just going to reiterate what I just said before I move on. So I'm expecting us to go to these levels right here, 170, 180, first target. And then we'll see, obviously, it's all going to depend on the strategic reserve and the US and Donald Trump. But we could go to that red line right here, that upper range band right here, which in all prior cycles, we always went in. And that would bring us to about, 270, which is pretty crazy. That's kind of my second crazy target between 240 and 280 in that ballpark. Very hard to predict. It could not happen, so I don't want to create false hopes as well on the short to medium term. Don't forget, we only have 1 year left max of a bull market, so don't be greedy. And don't forget that you will never go broke taking profit. So the percentage of how much I take profit will be based on the internals of Bitcoin. So I just want to quickly do a recap. I showed these multiple times in all my videos. So just looking at the MVRV Z-score, you can see that we are not near a top in Bitcoin. So the higher this is, the more it's going to make me basically take profit. So once we're at 170 and 180, if we're already touching the red zone here, obviously I'm going to take 50% off. But if we're only, I don't know, in these levels right here, or at level 4 to 5 on the Z-score, I might just take 30% off the table. So it's all going to also depend on where we are in the internals of Bitcoin. So if we look at the Bitcoin return on investment calculator, that would basically bring us to a market cap for Bitcoin between 3 trillion and 5 trillion. So that's kind of where I think we're going to most likely go before we have a top. So the last chart I wanted to show you guys is an old chart I showed you guys months ago, I think even maybe 1 year ago. It's basically a bi-cycle top indicator, but I like to look at it based on phases for Bitcoin. And as you guys can see, basically the last phase, I call it the phase 4, and that's when we go parabolic and everyone is FOMOing. And it occurs once we break above the pink line of the pi cycle. And so right now, this is where we are right now. We have not broken above it yet. And now I'm going to show you an updated version of it, of where we stand today in the present time. All right, so this is the updated version. And as you guys can see, if I zoom in the updated version, that pink line has now moved to $138,000 USD per Bitcoin, guys. So until we break that, that's when we enter that FOMO stage. That's really when you want to take profits, okay? Obviously using the levels I showed, right, on the weekly time frames and combining that with the internals. So this is why right now I'm not too worried until we start going parabolic and we break that pink line. You know, it's not a good time to take profits yet. Obviously, depending on, your own tax strategy or how you're managing your money, that's on you. But for me, for long-term portfolios, there's absolutely no reason for me to take profits at the moment. And right now, so we're basically on track for the past two cycles, and the next few months should be extremely bullish if history repeats itself again. And then my second stop for Bitcoin obviously is going to be time, which I just talked about. I believe that we have 6 months left of window of bullishness. So obviously, after the first 6 months of this year, which is the first half of 2025, I will take 50% off of my position, most likely. So hopefully this helps you kind of just learn how to think to take profits. For me personally, when it comes to taking profit, there's two things that I take in consideration. One, my targets to the upside, and two, time, which is very important. A lot of people don't have time. They don't take it in consideration. But most likely right now we're entering that last quadrant, that one last year for Bitcoin and the bull market cycle. So once we're in the half, it's a really good time to just take profit. You'll never go broke taking profit. And as you guys can see, every time the year after the halving, if you took profits in the middle, you never lost money. And at the end of the day, that's what's important in my humble opinion. Sometimes you lost on some gains, but at least you never lost money and you never get wrecked when the bear market comes. At least you always have cash to deploy and buy more. So that's kind of how I'm thinking about this at the moment. All right, so we're at the end. One last thing, super cool data I'm about to show you guys. You're not even here yet. Doesn't matter. Hopefully you are. Yeah, so I'm just gonna show you guys this before we end the video. So basically, in this screenshot, Deontay used data and he basically compared a portfolio that was 90% invested in cash, right? So basically, it could be short-term treasury bills or just pure cash, right? Basically, you're yielding nothing, right? You're not really making money on cash. And if so, in short-term treasury bills, maybe 3 to 4%. So he took a portfolio with 90% cash and 10% invested in Bitcoin since 2020. So for the past 5 years, basically. And the irony is that this portfolio outperformed a portfolio that would have been 100% invested in the S&P 500. So a portfolio that was 90% cash and only 10% in Bitcoin would have outperformed being all in the S&P 500, which is pretty crazy as a statistic. And then he also wanted to see, the returns through time, which is very interesting. He basically used data from 2016 to today and looked at, how much money you would have made or lost if you held Bitcoin for 1 to 5 years. And you can see that, the longer you hold Bitcoin, obviously, the higher the probability goes towards you making money, and that the returns are actually staggering. Like the returns are insane, guys. Like it's just nuts. So for me, the biggest point I take from this is that if you hold Bitcoin for 4 to 5 years, it's almost mathematically impossible for you to lose money unless you capitulate and you sell at the bottom. All right, guys. So that's it. So we'll see if the momentum keeps going higher. So hopefully this helps you guys. So just to be clear, I'm bullish for the next coming weeks. As I mentioned in my last video, narrative always follows price action. And I believe that there's going to be a lot of bullish news coming in for the next coming weeks out of nowhere for both crypto and the broad market. So I'm expecting momentum to continue slowly grinding to the upside. So I wish you guys a beautiful day. Hopefully this helps to navigate the market and learn some cool stuff. And yeah, so catch you in the next video. Have a great one. Stay blessed and may God bless you. Thank you.